John, welcome. Good to have you with us. I mean, I have to say that some of the numbers in here seem outlandish to me, to be honest with you. 44% of respondents plan to buy a residential property over the next 12 months, the highest reading since the survey began in 2014. That's 2 out of 5 people. Who are you surveying exactly?
It's a good question, Tyler. Thanks for having me. It's a wide-based survey. In fact, this housing intentions survey is from our evidence lab here at UBS, and it's been going on for years. It's one of the longest-standing housing surveys on the street. So it's a wide range of folks that were surveying across demographics, across ages, and so it's a pretty unbiased account here.
How big is the survey? How many people are surveyed?
Over 2,000.
Over 2,000, and it is not high income skewed, it is just the general population.
Correct. And there's some other interesting things that came out of this. I mean, you mentioned the 44% of respondents that would buy a residential house, and that was a record. 70% strongly agree that owning a home is a great investment. 80% didn't view affordability as a major problem. And 90%, believe it or not, believe the value of their home would be higher in 6 months. Now, that's really important, particularly given what's being contemplated in the stocks right now.
Wait a minute here. My note says 78% of respondents versus 66% in June believed that finding an affordable home would be, quote, somewhat to very easy. Somewhat to very, but wait a minute. Interest rates have gone to 7%. Prices may have come down a little bit, like 1% in the past 2 months, but that's not, I just don't believe that. I just don't believe that people think affordability is no sweat, is a layup.
You know, Tyler, it was surprising to us as well. And the numbers are the numbers. But let me put a little perspective around it. One, I think that if we look at what happened in August with new home sales, interest rates came down a little bit. It showed that there was a lot of demand elasticity. We had a print of 685 that was up 29%. Sequentially. Now, also keep in mind, and we've been talking about this for a while, there are a lot of levers that first-time home buyer can pull. You know, living a little further away from the city, there's a huge generational wealth transfer, in-migration, and so forth, not to mention student debt relief. So we believe that first-time buyer that's driving things here today in the market is still reasonably well set up, and if they can buy, they will buy, even if that means buying less.
And the price of homes, I mean, they're falling fast. The biggest monthly decline since 2009. I'm curious, looking at the data that you ran, John, and the survey, what does it tell people who are watching right now how to invest in home builders, the sector you cover?
Yeah, it's a fair point. Look, I mean, prices were down sequentially, and I would say actually marginally. It was historically a bigger move than normal, but if you look year over year, they were still up substantially. How do you invest in the group right now? I think you have to be very careful, right? I mean, interest rates are moving 20 basis points a day in either direction. So I can't sit here and tell you in good faith that I'm out there pounding the table saying now is the time to buy. What I am saying is that I think it's a time to do the work on the stocks and get ready, because we are heading into what is seasonally a very, very strong period for the stocks. And if interest rates can just settle, we could have what's called a hope trade, November through January trade, that could be on steroids.